A lot of times people, for the huge run up we've seen in real estate prices, a lot of people, I'm going to say, feel stupid for renting. But I think a lot of times people don't really kind of break down all the numbers associated when it comes to buying versus renting. There's a lot more to the equation than just saying you're paying somebody else's mortgage at the end of the day.
Yeah, I mean, people look at rent as just throwing money away, which rent is an expense, but there's also expenses going along with home ownership. And from a cash flow perspective, you need to look at those different outflows and where the rest of your cash flow is going.
Yeah, and what we kind of did here today is we actually looked at, Zillow and just kind of just very simplistically saying, what would the numbers be like in a situation of buying a house versus renting a house? And what we'll look at first is just the rent situation. And found this nice house over in Carmel Mountain here in San Diego. And if you're not in California, this will probably look like a lot in rent, but here in California, no rents are kind of elevated. This house is going for about $4,400 a month. And that might sound expensive at the end of the day, but you have to understand when you rent, that's pretty much going to be the only expense that you look at paying. You're still going to have your utilities at the end of the day, but you'd have that if you bought or rented at the end of the day. Mm-hmm. So what we did is we looked at this particular house. I said $4,400 a month in rent, has a Zestimate on this house of about $1.23 million. So what we did next was we looked at saying, how much would this cost if we actually stepped in to buy this house? And the way Zillow works, unfortunately, is we can't look at that particular house. So we just had to look at the calculator purposes here. So you can see we have a home price of $1.23 million. I'll let you break down the numbers here, Harrison, of kind of what we're looking at for the true cost of ownership.
Yeah, so 1.23 is the total cost, but you're not going to write a check for 1.23 in most cases. You'll make a down payment here. We're assuming 10%, so that's 123 grand. Right now, interest rates are around 7%. This doesn't include any points that you might have to pay, but there definitely could be some, especially with the 10% down payment. Mortgage insurance, if you make anything less than a 20% down payment, you're going to have some mortgage insurance in there. Property taxes in San Diego is about 1.25% of the purchase price. So that's where that comes from. And then home insurance, maybe you're looking at around $200 a month or so. So when it's all said and done, you're living in a similar caliber home, but on a monthly outflow perspective, this is around $9,400 a month versus the $4,400 a month it costs to rent. So we've got a $5,000 a month difference as far as the cash flow goes.
And the other thing I always point out to people too is with renting, you don't have any maintenance costs on the homes necessarily. You're not going to have to, fix a roof or, fix a broken pipe. That's going to fall on the landlord there. So you're not going to have those kind of maintenance costs. I mean, generally, what do you tell people those maintenance costs look like on an annual basis, Harrison?
It could be anywhere from like 0.5% to like 3% of the property value. In San Diego, things are pretty expensive, so it might be on the lower end of that. But still, there's going to be times when you have to replace the roof, or you're going to need a new water heater, or just for fun, you're going to, redo the bathroom, or, there's a lot more costs associated with home ownership. The flip side of this, the response that everyone always says, well, when you own a house, you're building equity in the house, which is absolutely true, but you still need to understand what exactly that means. So, in this situation, we're looking at this house, $1.23 million purchase price. Of that $9,400 a month that you're paying, some of that is reducing the principal amount. Majority of it, however, is going to expenses, property taxes, interest, things like that. But if we look at the amortization schedule of this loan, borrowing, in this case, a little over $1.1 million at that 7% gives us, in the first year, we pay down the mortgage by a little over $11,000. Comes out to an average of like $937 per month. So of that $9,400 a month payment, less than $1,000 of that is actually going to the principal of the loan. The rest of it is just a pure expense. So what that means is, for purchasing this home, in this case, you would need appreciation to make up the difference of that extra cost. So, if there's a lot of appreciation in this home, you can build equity, which is what has happened in the past, last couple of years, property values have gone up. So equity amounts have gone up. But going forward, you have to look at, well, what type of appreciation do you expect to have? Because if you're going to be paying an extra $5,000 a month relative to renting, you need at least $5,000 of equity on average to be built every single month. Now, we know about $1,000 of that is coming from paying down the mortgage. So that means the extra $4,000 or about $50,000 a year needs to come in the form of appreciation on that home. And on $1.23 million house, $50,000 a year is around 4%, 4% or so. And so are we going to have a 4% appreciation? Maybe not, but that's the thing to look at. You buy a house, you need that appreciation to work out, or else you could be a lot better off renting and then saving that extra $5,000 a month and putting it somewhere that is going to give you growing appreciation.
Yeah, the big thing I always tell people is you have to also look at that opportunity cost that comes into play. I mean, number one, you have that $123,000 that you now put in that house. If you get no appreciation on the house, let's say, well, you'd be better off putting in a savings account, earning now, we'll call it even 3-4% that you can get on a savings account. You would have been better off doing that. Then also to talk about that monthly cash flow that you're taking and actually that excess you would have had from renting. I think the big mistake a lot of people make is when they now are buying a home, they think, oh, well, now I got to be careful and not spend as much money. Well, if you took that same principle when you were living in a house you were renting and actually invested those funds, you'd be far better off. Not to mention, if you forego putting money into the 401k plan that also offers a match, well, gosh, that is no way possible are you going to be able to recoup those missed gains in real estate, in my opinion.
Yeah. And with the 401k, you're getting the tax benefits from that. On the other side, when you buy a house, there's tax benefits with it. But, when you buy a house, especially something that large, there are going to be some tax benefits that go along with it. You can write off, in that case, some of your property taxes, not all of them. And you can write off some of your mortgage interest, not all of it. But the standard deduction for a married couple this year is close to $30,000. And so that's a floor. If you buy a house now, maybe your itemized deductions, when you add in everything, is going to be $55,000 to $60,000. So you've got a little bit more deductions there, but it's, if you break that down to a savings amount, there's an extra from $30,000 up to $55,000, maybe an extra $25,000 of deductions after, your federal and state actual tax benefit from that. That would probably be somewhere around $10,000 to $12,000 a year in actual tax savings that gives you. So, that helps out a little bit, but it's by no means, something as simple as, buying a house is going to, hugely reduce your property tax bill, especially when your annual payment is $113,000.
Yeah. I mean, there's a lot to really consider when you're looking at buying a house or continuing to rent in the particular house you may still be in. But the big thing I tell people is just because we're saying these numbers might not make sense all the time, I'm not saying it's always wrong to buy a house. I just want to point out that saying, maybe it's not the most optimal decision you can make. Doesn't mean it's the wrong one. I just think a lot of times people, when they buy a house, they think they're being very, very financially smart by doing so, when in reality, it's not necessarily always the right thing to do at the end of the day.
It's not always the right thing to do, and it's not the only thing that you can do. And a big point that you brought up, Chase, that I think is really important to understand is if you're renting somewhere, in pretty much every case, that means that your monthly cost of housing is going to be a lot less than what it otherwise would be. So you need to be saving that difference. And if you're not, then, buying a house could be helpful. But in that case, the only reason it's helpful is because it's forcing you to set aside money to put into that asset. But if you can be disciplined when you're renting and save that extra money, put it into your 401k, put it into a Roth, put it into a taxable brokerage account, put it into whatever, you're still building wealth that way. It's not like buying a house is the only way to build wealth, but there's other ways to do it. And as you go through your life, you want to build wealth in the most efficient way every step along the way.
And you bring up the point too, if you are renting, you do need to be saving money, because one thing I will say is when you buy a house, now your costs essentially are going to be fixed for that time. If you live in that same house for 20 years, your costs necessarily aren't going to change as much, because the big bulk of that is going to come from your mortgage at the end of the day. Where renting 20 years from now, rents are going to be higher than they are today. So you need to kind of understand that balance between the two. And I always tell people too, I mean, if you are looking at buying a house and you're looking at, you have kids and you want to say, hey, I want them to go to this particular school. We want to build a home, build a place that we want to live. Then by all means do it. If you can afford to do it, then do it if that's what you want. But again, it comes down to understanding what you want at the end of the day. I think a lot of times people feel pressure into buying a home and feel that they're missing out. Just want to show people that's not necessarily the case.
Yeah, that's exactly right. Both of us are renting right now. Both of us will buy a house at some point, but just because we're renting right now doesn't mean that we're not building wealth in other areas.
Exactly. That's the best way to look at it. So hope this video was helpful to you. And if it was, be sure to subscribe to our channel. We're going to try and do these financial planning videos. We also do stock analysis videos. Hope those help you out.